Kanak Ltd is considering two mutually exclusive projects, either 195 lakhs in a fully automatic machine or 150 lakhs in a semi-automatic machine. You are given a present value of 1 and 10% rate for 8 years and estimated profit. Okay, this is important, profit before depreciation and tax, which they're calling EBDT. And now we have data. Okay, we've been given two machines and we've been asked to calculate the NPV and profitability index for both of them, assuming 10%. Okay, and we have to choose which machine to take. So I'm going to do for fully automatic machine in this video. The steps to do semi-automatic machine is going to be exactly the same. So see how I'm doing fully automatic machine, calculate semi-automatic machine on your own and give your answer in the comments. I will be checking. Okay, so the title for this is going to be, okay, we can say calculation, or you can simply put the name of the machine. So fully automatic machine. Okay, and whenever you're solving these kind of sums, try and factor in as much of the data as possible, simply by picking up the numbers and putting them. Alright, so we are concentrating on fully automatic machine for now. So 195 lakhs is the investment, and keep in mind the investment is something that comes right at the bottom. So we'll place it later. We've been given year. Okay, we've been given year. We have been given the discount factor. Okay, discount factor at 10%. Nicely, they've given it to you in this question. Don't expect that to happen in the exam. You may have to use the calculator and make use of the formula 1 upon 1 plus r raised to the power of n. Okay, how is that done? I have already uploaded a separate video explaining NPV and profitability index. Please watch that. Now, we have all of these given to us, so we don't have to take tension. We can simply pick them up and put them here. Okay, similarly, years have been given, we'll place them here. I'm going to go ahead and fill this up. Okay, and then we're going to continue with the rest of the question. So, for example, what am I saying? Years we have 1, 2, 3, 4, 5, 6, 7, 8. So I'm going to go here. And we have 1, 2, 3, 4, 5, 6, 7, 8. And then we have our discount factor. So 0.909, okay, 0.886, and in that way I'm going to fill up and we shall continue. You also fill up until then. Okay, now I've gone ahead and filled up all the discount factors. Our next step is to start proceeding towards cash flow. Okay, and remember, we would have EBDT in this question. We subtract depreciation, we get ourselves EBT. We subtract tax, we get ourselves EAT, earnings after tax or net profit after tax. Okay, and to this number, we add back depreciation to get cash flow. Alright, so as far as we are concerned, this, what we have here is what we need to put into the table. Okay, so we are starting with EBDT because they have given us EBDT, earnings before depreciation and tax. Okay, here it is. And that means all of these numbers are not cash flow. You have to be very careful. They don't necessarily give you cash flow directly. Sometimes you have to calculate. Okay, so all of these numbers are earnings before depreciation and tax. Right, so again, the amount is given to us in lakhs. We will write it in terms of lakhs. Okay, because if you don't and then you start multiplying it into the discount factors, all your numbers are going to be decimals and that's going to be irritating. Okay, so we are looking at for year 1. For year 1, we have 40 lakhs. So corresponding to year 1 under EBDT, I'm going to write down 40 lakhs. Okay, then we have 45 lakhs. Then we have 50 lakhs. Then we have 55 lakhs. Okay, 60, 65, 70, 70. So 60, 65, 70, 70. Now, I've copied all the numbers that are possibly there in the question. I must now complete the rest of the table. The next step after we have earnings before depreciation and tax is to subtract the depreciation. Okay, depreciation. Then after subtracting depreciation, we get ourselves earnings before tax. Then we can calculate tax. Okay, and tax, they have told us, is at the rate 40%. And once we're doing that, we get ourselves EAT, earnings after tax, or NPAT. Okay, and once we have that, we can add back the depreciation from here. Okay, so we are simply adding these two to get ourselves cash flow. Cash flow. Now, I need to calculate depreciation, and depreciation isn't directly given to us. They have told us that the company provides depreciation on machinery at 10% on written down value basis. Okay, written down value basis means I can't take 10% of 195 lakhs, which is the cost of the fully automatic machine. Okay, remember, for semi-automatic, you have to do with 150 lakhs. I'm doing with 195 lakhs. Anyway, I can't simply take 195 lakhs into 10%, which gives me 19.5 lakhs, and subtract 19.5 lakhs everywhere. Why? Because it is on a written down value basis. So when it's on a written down value basis, we need to have a working note, which I'm going to do over here. Right? We have particulars. Okay, and amount. Right, and we have, let's make a year column as well. It will be easier for us to solve. Okay, and let's see, I'm just going to use these lines instead. Okay, so we have, we need to do it for 8 years. I don't think it's going to fit here. Let's do downstairs. Right, so I'm going to go ahead and draw the table. After that, we shall continue with the sum. Now, I have made a table. I've already put the years down. Opening balance, or WTV, at the start is what we have on top over here, which is 195 lakhs. Okay, so 195 lakhs is as good as saying 1 crore 95 lakhs. So we have 1 crore 95 lakhs, and 10% of that is going to be 19 lakh 50,000. Now we have 1 crore 95. Okay, 1 crore 95 lakhs. Okay, minus 19 lakh 50,000, which gives you this. Okay, and that is going to be our number over here, 1 crore 75 lakh 50,000. Okay, and then again on this number we will take 10%. We will take 10%. Okay, and you don't really need to do that. You simply take out a 0 and you know what that number is. So I'm just going to multiply this back by 10. This have to make a calculation easy. Okay, so we are talking about 17 lakh 55,000, and from this number we can subtract 1755,000. Okay, and we end up with 1 crore 57 lakh 95,000, and again into 10%. You could do it on the calculator into 10% or into 0.1, but I know that I simply knock out 10 because it's 10%. I know directly what that number is going to be. Okay, so we are talking about a depreciation of 15,79,500. Okay, and from this number we subtract 15,79,500. Okay, and we end up with 1,42,15,500. 1,42,15,500. Okay, you're understanding we are going to go closer and closer to a decimal point anyway. Now, we have this in place. Again, 10% of that is going to be 14,21,000. Okay, and let's see, 14,21,550. Okay, we just knock out that last zero, and again we do the same thing. We will take this number and subtract 14,21,550. Okay, and we end up with 1 crore 27,93,950, and again 1279395, and we can put the commas like this. Okay, this is our depreciation for year 5. Like it or not, next year we're going to enter a decimal point for depreciation, which I'm just going to round up to the nearest rupee. Right? Dealing with decimals is painful. So we are talking about subtracting 1279395. Okay, which gives us 1 crore 15 lakhs 14,555. Okay, and now you take this number and find 10% of it. Now I'm out of zeros, but I can still take the same thing down and put a point over here. So this is what my depreciation number is going to be: 11,51,455.5, which I'm just going to go ahead and let's see. If we've been given instructions in the question, we'll follow the instructions in terms of decimals. Okay, they have not said anything. They have not said anything. So I'm just going to nip it in the bud. It doesn't really matter paise up and down. Okay, so we are going to write down the depreciation as 11,51,456. 11,51,456, which we can then again subtract from here. So 11,51,456. Okay, and that gives us 10,36,300. Sorry, it's 1 crore. You need to be very careful with your commas. Okay, it is 1 crore 3,63,099. Okay, and again we put a point over here, and accordingly we can find out what's 10%. Okay, so I'm going to write 10,36,300. Okay, and this point means we round up. That means this 9 becomes a 10. Okay, so we have 10,36,310. Okay, and one more time, unnecessarily I reset the calculator. One more time we need to subtract. So 1 crore 3,63,099 minus 10,36,310, which gives us 93,26,789. And now this number into 10%, which I think we can do here itself. We have 9,32,670. Remember, this is point again. So many times we have rounded up. 3 extra rupees we're getting. Doesn't matter when we're talking about crores, 3 rupees. Okay, so we have 9. These are our depreciation numbers. Okay, and let's see. I mean, writing anyway is painful. Instead of typing, using a graphics tablet is as good as typing. Is as good as writing. But when you have shortcuts like this to make your life easy, you should use it. You, on the other hand, have no such option. You are going to have to do it the hard way. And I'm not saying what I'm trying to do would even work. Let's see if it does. Okay, so I'm going to somehow place it here. Okay, so just about with a little bit of adjustments here and there, I have been able to pick up the depreciations from downstairs herewise and place them to their corresponding years. Okay, so let's see. Do I need to make any adjustments? I could do this. Okay, I could bore you with copy pasting them, or I could show you the tricks of the trade. Okay, we have this. And this. This. Okay, so we have our depreciation for all of them. It's legible. Okay, slightly off because I've had to resize, but this should do. And now we can get on with life. So we have 40 lakhs. We have 40 lakhs minus 19 lakh 50,000, which is 20 lakh 50,000. So under EBT, we can write down 20 lakh 50,000. Okay, then 40% of this number. So into 40 by 100, we have 8 lakh 20,000. So 8 lakh 20,000. And we take 20 lakh 50,000 minus 8 lakh 20,000, which gives us 12 lakh 30,000. Okay, 12 lakh 30,000. And to this we must add depreciation. Okay, so we add depreciation and earnings after tax in order to get ourselves cash flow. So 12 lakh 30,000 plus the depreciation for that year, which is 19 lakh 50,000 plus 19 lakh 50,000 gives us 31 lakh 80,000. 31 lakh 80,000. Okay, so now that we have this in place, you have understood how it's done. We have to do it for all of them. Okay, so what do? We take EBDT minus depreciation is equal to EBT minus tax is equal to EAT. Then EAT plus depreciation, you are adding both of these items, gives us cash flow. You need to do it for each of them. Okay, so I'm going to finish this off and then we shall continue with it. Alright, now that we have all of these numbers in place, feel free to pause and check whether you have also got the same numbers. Okay, and then we can continue with calculating discounted cash flow. Alright, we need to make another column, which I'm going to do just here. Right, so we extend. And so when you all are making the table, you all can remember to keep one more column. Or you could do it again downstairs, either way, up to you, entirely up to you. Okay, so we have this, okay, and I'm going to have to need this to be a little longer because we have to get into some more calculations downstairs. Okay, so maybe till here. Okay, similarly, till here. Okay, now, going back up, I need to calculate discounted cash flow, and that can be found by multiplying the discount factors into the cash flow. Right, so we will start with 0.909 into 31 lakh 80,000, and that is going to give us our first DCF. Right, so we have 31 lakh 80,000 31,80,000 into 0.909, which gives us 28,9620. 28,9620. And once we have that, then we can calculate for all of them. Okay, and again, you can do it yourself. I'm going to go ahead and fill up all these numbers now. Alright, so now we have all our numbers and we have the discounted cash flow for every year. Please check if your numbers are matching these. And we need to take a total. We need to take a total. Okay, so total discounted cash inflow, which will give us, use the calculator, you will end up with 2 crores 7,90,187. Once you have this in place, we subtract the total discounted cash outflow, which in this question is only the investment. Okay, and the investment is 1 crore 95 lakhs. Okay, so we are subtracting 1 crore 95 lakhs from this number. Okay, and I'm going to put this on the calculator and do the math. So we have 2 crores 7,90,187 minus 1 crore 95 lakhs. Okay, and that gives us 12,90,187. 12,90,187, which is our NPV. Now, if you want to calculate profitability index, instead of subtracting, we divide. Okay, so profitability index is going to be equal to that same number, same set of numbers that we put in. Okay, I'm going to be putting in this and dividing it again by dividing instead of subtracting by 1 crore 95 lakhs, which gives us 1.0661. Okay, and this is 5 or more than 5. So if you want to write it up to 3 decimal places also, it's fine. 4 decimal places it's also fine. The answer is 1.0662 for profitability index. 1.0662. Okay, so you have to do the same thing, same table, same calculation one more time for semi-automatic. Okay, in the case of semi-automatic, the expense, the amount you're going to subtract, is 150 lakhs. These are your cash flows. Okay, not your cash flows, remember it is EBDT. And based on that EBDT, again you need to calculate depreciation because the cost is not 95 lakhs, it's going to be 150 lakhs. So I've done half the sum in this video. The other half is your job. Please write down the answers in the comments. If you have any doubts, leave those in the comments too. Thank you.